A lot of you have been asking me to cover lesser known companies on the channel, companies that are also much smaller than the usual ones, so maybe less than $1 billion, less than $2 billion companies, things like that. Because one, yeah, maybe the upside might be much bigger because let's say you buy it at $1 billion and then in the future it becomes a $10 billion company, $20 billion company. That's quite some upside. But of course, with those types of companies, with those types of investments, there usually is a lot more risk attached to it than looking at a company like Amazon, I would say, even Netflix or Mercado Libre or Palantir or stuff like that, right? But it's interesting to look at. I've made a community post. You wrote a bunch of companies under that post. So let's first start with two in this video. The first one is The Honest Company. Yes, I've known about this company for quite a while, never really spoken about it on the channel. The only reason I know about it is because of Jessica Alba. That's about it. Now, let's dig a little bit deeper and see what some of you have seen in this company, because I think it was one of the most popular response under that community post. Why? I still don't know, even after looking into that company. But okay. Let's start with The Honest Company. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Full disclaimer, I do not own any of the companies that will be mentioned in this video. And just because I chose those two companies does not mean that I will not pick other companies that you've mentioned under that community post. And by the way, just because I make these videos does not mean I'm bullish or bearish on those companies. I'm just providing information and my own thoughts on these companies. That's about it. Anyways, The Honest Company, ticker symbol HNST, has a market cap of $379.3 million. Over the last 3 years, it's down close to 60%. Year to date, it's up close to 15%. And year over year, it's actually up 218%. Why is that? Well, they're doing better than before. Now, as for what the analysts are expecting, they're expecting revenue to grow around 7% in fiscal 2024, still being unprofitable. In fiscal 2025, revenue growth is expected to be closer to 5%, also still being unprofitable. And then in fiscal 2026, revenue is expected to grow around 5.2%, 5.3% year over year, and EPS is expected to be 4 cents. So small company, still not profitable and not really growing that fast. That doesn't mean it's a bad investment, by the way. EV to sales in the next 12 months and in the last 12 months sits at 1 time, so okay, not expensive. And right now, the average analyst price target, by the way, there are 8 analysts covering this company, and the average analyst price target sits 42% higher than the price we're at today. That does not automatically make it a buy, just because the price target is 42% higher than the price we're at today. All right, so The Honest Company, what do they sell? Well, they sell a lot of stuff, by the way, for kids, for your home. I mean, you can see here revenue for 2023. The majority of the revenue came from diapers and wipes. Then you've got personal care and then household and wellness, where you can find baby plus diapers, wipes, bath and body stuff, skincare, makeup, baby clothing, cleaning, gifts and kits. And there's also a subscription. As for the last earnings report, revenue came in at $93 million, reflecting a growth of over 10% year over year. The revenue for the last 12 months was $355.7 million with a growth rate of 6.38%. Gross margin for the quarter was 38.27%, showing a significant improvement from previous periods. Operating margin for the quarter was negative 4.35%, a notable improvement from negative 15.36%. So, like I said, things are getting better inside the company. And so if we look at what has happened in the last couple of years, revenue has grown since 2019. Revenue has grown 72.6%. Free cash flow in the last 12 months is positive as well and is expected to be positive in the next coming fiscal years. If we look at gross profit, operating margin, gross profit margin, and net income, this is basically the picture that we're getting. So gross profit margin has been improving, as you can see here in the purple line, has been improving for the last couple of quarters. If you look at net income, that has improved as well, although still negative. Then operating margin, still negative here, but it was much, much worse before. For example, here in Q1 2023, that was negative 19.2%. Now it's negative 4.4%. Now, of course, seeing what they are selling, this is nothing new, right? They did not reinvent the wheel here. It's just the brand. The brand is what makes them what they are. Plus, when you're called the honest company, of course, there is an aspect of, oh, you're buying these products instead of the others because you care about the environment, you care about the stuff that's inside the products, and you care about yourself, your children, etc., compared to the other products that are competing with the honest ones, right? So that's basically the shtick here. Now, from a business perspective, as you've seen, margins are getting better, so our profitability profile is improving. Now, why are people so excited about that? I honestly don't know. I personally have never tried their products, never seen them as well. But then again, I'm from Europe, so maybe that's why. So yeah, there is that. What we've seen is positive, right? Revenue, free cash flow, net income, margins, etc., all trending in the right direction. And that's probably why we've seen this recovery, right? From the stock was here, $1 back in late 2023, and now we're at $3.79. Yes, we can say that this was here a double top at around $4 and $64.70 or something like that, double top, and well, we go back down. In the last 2 weeks, we've seen a small recovery here above the 200-day moving average, which sits at $3.29. RSI is neutral. Overall, this is a company that is trending in the right direction. Is it an exciting investment? To me personally, no. I can see why some are excited. Maybe you bought here at around $1, maybe $2. You're up by quite a lot. You're excited by that. Fair enough. But overall, that's the honest company right now. Moving on to company number 2, and that's Aehr Test Systems. It has a market cap of $464.6 million. Year to date, it's down 40%. In the last 5 years, it's up 752%. In the last 3 years, it's still down 25%. And year over year, it's down 57.2%. Now, this company has already reported earnings, actually, I think a week or so ago, a beat across the board. Stock went up, and then, as you can see right here, stock went up, but then stock went back down. Why is that? Well, they filed a $100 million mixed shelf, which means they might sell from time to time up to $100 million in securities. When those announcements get made, usually stocks go down, but the initial reaction after the latest earnings report was a pretty positive one. Yes, maybe I should have released this video earlier. Sorry, didn't have the time. But let's talk about this company. This company, as you can see, has a forward PE of 45.8 times and forward EV to sales ratio of 5.7 times. Here, fiscal 2025, sales is only expected to grow around 7% and EPS is expected to be down 75.2%. But we are seeing a solid reacceleration top and bottom lines in the next, or it's expected, in the next 2 fiscal years. Right now, the average analyst price target, only 2 analysts on this one, by the way, which is quite strange, but okay, sits close to 60% higher than the price we're at today. So, Aehr Test Systems, they provide test solutions for testing, burning in, and semiconductor devices in wafer level, singulated die, package part form, and installed systems worldwide. As you can see right here on the screen, these are the systems, these are the names. So when you're reading these things during an earnings call transcript or whatever report they're releasing, these are the systems that they're talking about. Now, what has happened with the stock? What has happened with the company? We've seen that it's down by quite a lot. Why is that? Well, one, revenue has decelerated by quite a lot. As you can see right here, revenue for the last quarter was $13.1 million. That's down 36.4% year over year. Free cash flow is positive, but was higher before, but it's positive right now. If we look at gross profit, net income, operating margin, and gross profit margin, from a gross profit margin perspective, still around the same, around 50% or so. If we then look at operating margin, here you can see a clear trend, and that's a downtrend. We're closer to 23.3%. We're now closer to 10.5%. So not great. Same for gross profit and same for net income. Yes, it's true. Net income is higher today than before, but I do think that's because of a tax thing that happened. So they benefited from that. Correct me if I'm wrong. Now, as to what is expected to happen in the coming fiscal years, where you can clearly see a reacceleration in growth. For revenue and, well, free cash flow is expected to be 16.8 million in fiscal 2025, which is, of course, much better than the $1 million that we've got in 2024. Revenue growth, 7%, then 29.9%, and then 36.5% in fiscal 2027. So growth is expected to reaccelerate. Now, of course, with these types of companies, again, these are just assumptions, expectations, but seeing how strong the report was for the quarter, as you can see right here, plus they reiterated their guidance for fiscal 2025. So they're saying here, they're reiterating its previously provided guidance for total revenue of at least $70 million and net profit before taxes of at least 10% of revenue. You would think that right now would be a better time to get in than when it was, well, generating revenues per quarter above $20 million and when the stock was probably higher than it is today. They also said that the key customer in the hard disk drive market is forecasting a production ramp up this fiscal year, which could be a 10% customer. Great for them. And so looking at Aehr stock right now, previously the stock did try to break out above the 200-day moving average back here in July. It failed. It went actually back under the 20 and the 50-day one, and it stayed under that for a while. Then we've got the earnings report, big green candle here on the weekly, got rejected at the 200-day moving average again last week. Again, same story here. So yeah, you have to look out for a clean breakout above that 200-day moving average. This is again on the weekly. RSI is pretty neutral, but after the earnings report, you would say it did get a little bit of momentum. Then of course the $100 million mixed shelf offering broke that momentum a little bit because, well, if they did not announce it, I would assume we would have gotten another green candle that would put the stock above the 200-day moving average. But again, you're not buying here candles and ticker symbols. You're buying companies, and this company is doing better and better. Now, personally, if I had to choose between Aehr Test Systems and the Honest Company, I would choose Aehr Test Systems just because of the, well, industry that they're operating in. Again, I don't have any position in any of those two companies. I don't expect to open a position in any of those two companies in the short term. Maybe that might change, but I don't really think so. But overall, that's about it. Two companies under $1 billion, two different industries, completely different industries actually. Hopefully you like it. Do share your thoughts on both of these companies. Do all of that in the comment section. Like, subscribe, do all of that. And I'll see you all in the next one. Bye-bye.